This week on the Retirement Quick Tips podcast, I'm pulling back the curtain and telling you exactly how I manage my 401k as a financial advisor. Today, I'm talking about why I max out my Roth 401k as a financial advisor. So, yesterday, I talked about how I max out every year, and I've been doing that for probably the last at least 10 years, maybe 12, 13 years. How much you contribute is a little bit different than whether or not you do traditional or Roth 401k contributions or a combination of both. So let me just explain the difference here. A traditional 401k contribution, when the money goes into your 401k, you get a tax deduction on that. So it gives you a tax benefit in the current year that you make that contribution. Then the money grows, and as long as it's in that 401k, it's not taxed. It can grow and grow and grow. You don't pay any capital gains taxes. You can sell and make changes and do whatever you want to do within that with those investments, and you're not going to incur any taxes along the way. But then once you get to your RMD age, which for most people, it's around the age of 73 right now. Once you reach age 73, Uncle Sam comes a knocking and he says, okay, now you need to take out a minimum amount every year that I'm going to dictate what that amount is, and you have to pay taxes on it. The difference then with the Roth is that you do not get any sort of tax benefit in the current year. So any dollars that you put into your Roth 401k go in after tax. So for that reason alone, a lot of people who probably should consider a Roth 401k, they don't, because they don't want to give up that tax deduction in the current year. But then the beauty of the Roth 401k is once that money is in the Roth, it's never taxed again. It's not taxed as it grows. It's not taxed later in retirement when you want to take money out. There's no required distributions because Uncle Sam is not getting taxed. He already got paid before you put the money in the plan. And from an estate planning perspective, if you want to transfer money to your heirs tax-free, the Roth is how you can do that. Because if I get to the end of my life and my husband has died, I've died, and that money gets passed to my kids, they inherit that money tax-free. Whereas a traditional IRA, it's also inherited tax-free, but the current rules state that you have 10 years and you have to withdraw and pay the taxes on all of it in a 10-year window. Not exactly a tax-efficient way to transfer money to your heirs. So that's the primary difference. And there's a lot of nuance to this, but again, this is about me. So I'm not saying you should do this because there's lots of situations where I actually do recommend that people prioritize saving in a traditional 401k over a Roth 401k. But I'm just explaining you why I do a Roth and the rationale behind that. Basically, I've chosen to forego a lot of tax deductions for future Ashley. I have from day one in my early 20s, when I was 22 years old and I started saving in a 401k, I have always selected the Roth option. Now, for many of you listening, that wasn't always on the table, but I started contributing and saving to my Roth 401k in 2007. So at that point, it was a feature that was available in retirement plans. You could do Roth contributions. And so I've always done that. And also, too, many people, there's a misconception that if your income is above a certain level, you can't contribute to a Roth. Well, that's actually true for a Roth IRA, but it doesn't matter what your income is. You could be Elon Musk or, you could have $1 million of income a year, and it's not going to block you from contributing to a Roth 401k. You would be blocked out and not able to contribute to a Roth IRA, but you can do a Roth 401k up to the maximum. So that's exactly what I've been doing for as long as I possibly can. And future Ashley is going to hopefully have a very large Roth IRA. So my goal at age 60 is to have $3.5 million in my Roth by the time I'm 60. That's $3.5 million that I can withdraw from and pay zero taxes in retirement. That's also a $3.5 million asset that I can pass along to my children if I don't end up using it during my lifetime, and I can pass that along tax-free. Now, would it be great to get that tax deduction? Absolutely. Do I advise all of my clients to put 100% of their 401k contributions into the Roth? No. But many people really enjoy and they can't get over that like psychological hump of giving up the current tax deduction, especially if that's what they've been doing for the last, 10, 20 plus years. Also, a lot of people in retirement, they might be in a lower tax bracket. Depending on their assets, depending on how much of their financial assets, the 401k or their IRA, traditional IRA, what percentage of that is your overall portfolio? If you have a lot of money already in a Roth or taxable accounts and a traditional IRA is not going to be this huge asset in retirement where you're going to have these large forced mandatory distributions and pay the taxes on it. Like these are all situations where people may be just fine contributing to a traditional 401k over a Roth. But if your retirement account balance are heavily tilted towards the traditional 401k, traditional IRA bucket, that's where most of your retirement accounts are currently. You are going to have large RMDs. You're going to have higher taxes in retirement. While the right answer really does depend on each situation, for a variety of reasons, most people, I would say, should consider at least a meaningful contribution to their Roth 401k every year. You don't have to do all of it. You don't even have to do most of it. But because of that tax-free growth, the tax-free withdrawals, no RMDs, tax-free transfer of wealth to your heirs, it just checks too many boxes. And I'm okay with giving up the current tax deduction in the current year. My husband doesn't like it too much. He says, I contribute too much to my Roth. He wants the tax deduction because, again, I am maxing out my 401k and I get zero tax benefit for doing that. But that's the choice I make. And hopefully, future Ashley will thank me. That's it for today. Thank you so much for listening. My name is Ashley Mitchikay, and this is the Retirement Quick Tips Podcast.